get to our market panel. Joining us now is Vital Knowledge founder Adam Crisafulli and CNBC senior markets commentator Mike Santoli. Adam, we had all the major averages finish the day down 1% or greater. Just looking at your notes from earlier today, you talk about purgatory. Is this it, or is this the beginning of a sharper pullback here?
So I think it is still kind of a purgatory. You still have these tailwinds that are in place, these macro tailwinds of disinflation, resilient earnings, the approaching monetary pivot. But you still have, on the flip side, there are a lot of excesses that are kind of being unwound. So a lot of that today in technology. I thought it was very interesting, the outperformance of the eco-weight S&P versus the market-weight S&P. That's largely a function of the severe selling that you're seeing in tech. And it almost seems like you're seeing a little bit of a pivot back towards what occurred in November, December, where you had treasuries rally on back of some dovish headlines and poor economic numbers. And that catalyzed a rotation into more of the equal weight sectors, so cyclicals and value stocks. And you did see that today. Financials traded great as tech came for sale. And so that to me was much more interesting. It's more of a rotation where the overall capitalization S&P is still kind of in this purgatory where it's going to churn and remove some of the excesses of the last several weeks in tech.
Yeah. Mike, I mean, it seems to me that one of the key debates here, not just for the bond market, but for stocks as well, is whether this repricing of Fed rate cuts that we've seen in a more hawkish direction in recent weeks is more a function of better growth, better economic growth backdrop, or whether this is a sign of sticky services inflation, particularly in housing, particularly on a day where we just had ISM services reading this morning that was pretty mixed.
Yeah, and reflecting that we remain in suspense about inflation in terms of being fully comfortable that it's going the right way. And I think that explains at least part of the shadow over parts of the market. But again, as Adam was saying, the cyclical parts of the market are working. It's not as if the market's message is somehow, raising alarms about the economic expansion. Maybe it should be on some level, but it's not at the moment. So I do think that's somewhat a part of it. I also think coming into this week, my thought was we are in the belief phase. So everyone believes we can have a good economy, Fed easing, and a kind of seamless rotation from the overbought growth in semis to other stuff. And sometimes the rotation, even if it happens, ends up being just a little bit, higher friction and a little messier. And the baton gets dropped sometimes when it's transferred.
Adam, I thought it was really interesting the way tech fell today. So Microsoft actually fell more than Apple, was down closer to 3%. Meanwhile, NVIDIA and even Supermicro, right, which has been rocketing high, those were actually in the green a little bit for today. It was the DevOps software stocks, the C3 AIs, which is in the AI category, MongoDB, HashiCorp even, where we expect to get numbers in just a few minutes. Those seem to suffer the most.
Yeah, and you could point to some fundamentals. You have the GitLab guidance, which is a little underwhelming. You have, like you mentioned before, the iPhone data points out of China. So you could find some fundamental headlines, but it just felt more like some of the excesses that have been accumulating are kind of just now. There's a little bit of a release going on, and that's really what's driving tech selling. It became too crowded. A lot of these prices were extended. You don't have a lot of valuation support. Not so much that fundamentals have really taken a dramatic turn for the worse. We're going to get a couple of important tech data points Thursday night with Avago, Broadcom, and Marvell earnings, and then in a couple weeks you have a big NVIDIA conference too. So I don't think it's so much people are looking at the tech landscape and saying fundamentals, have deteriorated remarkably or dramatically, but it's more, in my opinion, just kind of a technical setup of positioning, sentiment, et cetera. And this kind of shift spurred by treasuries, the move in treasuries is an important catalyst back into some of these more value groups as well.